Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is April 28th, 2023, and I'm here to bring you the market wrap-up for the week just concluded. Today, I'll be looking at the SPY and the QQQs to look at the broad market, and I'll look at that in two time frames for the previous trading week, and then we'll also look at it for the rolling month for the last 5 weeks. And then look at some of the key sectors based on the sector ETFs, and we'll highlight various areas of relative strength and weakness. And again, we'll look at that for both of the time frames that I just mentioned. Also, we'll then go to the live charts, and we'll go to the candlesticks, and we'll actually look at the SPY and the QQQs in depth. And we'll take a look to see where there might be some key trading levels, both above and below our current prices, in order to identify potential bullish or bearish trade setups. And then lastly, we'll look at a couple of popular symbols that a number of our subscribers and lots of other traders tend to look at. So we'll take a look at those in the same context. All right. So that's the agenda here today. Before we go on, of course, the ubiquitous disclaimer: everything that I'm about to present here is for informational purposes only, and educational purposes as well. We are not financial advisors. We are not brokers. So obviously keep that in mind. And that is the disclaimer. So let's take a look at the market for the previous week. So here's what we're looking at here. This is a percent change chart that I set up here. And it's based on the close of the prior week here. So this is last Friday. Okay, so here is everything that transpired since last Friday, and you can see that a relatively tight week again, matching up with last week. Although last week was even tighter in terms of its range, and I'll show you that in a second here. But you can see obviously the Nasdaq 100 index was up just about a little less than 2%, and the Russell 2000 was down about 1.33%. So you can see pretty tight range here. And that's kind of where the broad market has been actually for the last few weeks. And so that's what we've been kind of looking at here. So that's what the market looked like here. And then if we go to the actual chart from the prior week, this is what it looked like in the prior week, and it was even tighter. I mean, you can see that the Russell was up 0.6, the Nasdaq was down 0.6, and the S&P had pretty much flatlined for the week. This week was obviously, in a sense, there was a kind of a tale of 2 weeks. We kind of had that through Wednesday. We had, kind of a drop here. And then there was, Thursday and Friday, there was some recovery there. So that's what we were kind of looking at there for the prior week, for this week. If we then look at, go to another chart here. So this is what we were looking at last week, and this was the SPY, the S&P 500. And when we were evaluating this last week on the 21st, which was right here, we had been looking at a couple of different levels where if we got a pullback or if price rose, where we might expect to then identify either bullish or bearish trades. Obviously, this was all kind of consolidating in here. And so this was just kind of an ungodly mess. So we really weren't interested in identifying any sort of trades that were in here. But if we look down here, and this is a 2-hour chart, as you can see, 130 minutes. So if we look down here, though, this was an area that I had plotted out when I did this recording last week. And this was an area you could see it was about 2 points deep, going from 401 and change to about 403 3/4 there. So this was an area that I had said on the recording that if we got a pullback to this region here, this would be an area where one could express a bullish trade. And of course, one could either buy the SPY itself or express the trade, in other ways using options by either buying a call, either in the money, at the money, or out of the money, depending on what your analysis yielded. Or of course, all other ways to express the trade based on this level would be to, let's say, construct a bull call spread in terms of a debit spread, in which case you would buy a call and then of course sell a call above to reduce the premium and also change the dynamics of the trade. And then of course, if you wanted to be collecting premium, one could, of course, express this same trade here by by selling a bull put vertical spread. And again, what one would do would be to sell a put out of the money put, and then buy a put beneath that in order to define the risk. And then again, then that would, of course, determine how much premium you collect once that nets out. So at any rate, those are kind of the four ways essentially of expressing the trade, all based on a pullback to this region. So that's what we were looking at, and that's what I kind of presented last week. And if we actually go to the live charts here now, and I bring up the SPY here. You can see, in fact, price, came right back to that same region that I just showed you on that prior slide from last week. And this is what I was looking at last week when I created the slide and did the recording last week. And you can see here this week we actually did get the pullback here, and so our subscribers, we actually then people again expressed the trade through the various means that I just mentioned. And so we got this nice move here, up from here to basically up here around, and pretty much it closed at pretty close to the other week high here. So this was actually a nice move that we got. I think this pullback happened right at the end of Wednesday. Okay, and so that was based on all of that analysis that we had done last week. Okay. So I'm going to move on here in a second. Also, just before I go on here, though, if you are interested in kind of what I'm showing you here, and you like what you're seeing here, we would be really grateful if you would kind of give us a like and subscribe to our channel. And even more importantly, if you would like to learn more about this concept of supply and demand, which is what our trades are based on, you can click on the schedule a call button. And you can schedule a call with either myself or my partner, Ryan Nocera, and we'd be happy to show you some other examples of setups that we've shared with our subscribers, as well as talk about our education. And then, of course, also, if you happen to have any symbols of interest that you would like to actually have us talk to you live about, we would be happy to kind of evaluate those symbols with you. All right. So anyway, if you do all that, that'll be awesome. So to move up so before I go on here, the basis of this level here that I actually just showed you here, this is what's referred to as an area of demand. This is characterized by an area where price kind of goes sideways here, and then we kind of have a spike out of there. And the spike is basically caused by an exhaustion of sellers at this level. Okay, the sellers very suddenly left here, and so the expectation was, when it came out of here very bullishly with a great deal of energy and went a reasonable distance away, when price returned, there was the expectation, or there was the expectation that there was still some buying pressure, and this was still an area of interest where people wanted to buy. It's just that not everybody got the opportunity to do so because price left here very suddenly. Okay, so we were not predicting that price was going to come back here. But what we did do, though, is we anticipated, so that if in fact price came back here, then we had a plan to buy here. So there was no prediction that this was going to all play out like this. But once it came back here, then we were anticipating that we could get this bounce, and then we constructed the trades based on that. And of course, within the bounds of that, we also had a careful risk management plan associated with it. So there was no expectation that necessarily that this trade would have worked perfectly. And of course, if it didn't work out, then we had a stop that would have been placed below this line here, because this is the point essentially where we feel we would have lost control of the trade. Okay, we expected it to bounce from here. That was our anticipated outcome. But if we didn't get the anticipated outcome, then of course, then the thing to do, of course, is to take a small loss and to move on. Okay. So this is where we are now in the charts here. Okay, and so what I want to do here is kind of show you here what other levels that we're looking at. Okay, and so really what we're looking at here is, let me just get rid of this extra line here. So right now, what we're looking at here is this level. Basically, when price came back here, it spent very, very little time here. This was almost kind of incidental contact here. And so as a result, we still feel that this is, if there would be another pullback, another corrective move down here, we still think that this level here still has juice in it. So we could expect to see, again, we will be anticipating another bounce from this level if we get a pullback from current price. And you can see this is located on a percent change basis. This is a little about 3% down from where current price is. Okay. Up here, we have a level of supply. And this level of supply is the same explanation of what I gave you for demand, except on its head. And of course, this is characterized by an exhaustion of buyers at that level. And if we go back in time to find that level here, okay, that's right here. And in fact, it's really based more on the daily chart here. And if I turn this into a daily chart, this would kind of tighten up here. All right. And it would kind of show really kind of a little cleaner here. But this is essentially, this is an area where there was an exhaustion of buyers here. Okay, price, thumped down here, kind of paused here for that day. And then, of course, then you had that very major gap here. Okay, and the price has not been back there since. Okay, so at this point, we're expecting, again, not predicting, but if in fact we do get a rise up into this level, we would expect there to be some downward price pressure in order to express a bearish trade there. You might see this jagged blue line up on top here. That represents the 52-week high. So that would be kind of a significant level that is reached. Obviously, the market was higher than that before that. But in terms of the 52-week high, that's what that represents there. Okay, so this is what we were looking at in terms of the SPY. So on the downside, again, if we get a pullback about 3% down, we have this level that worked before. This might actually be another area of interest. I might look at this. And then right here, this is a level that's about a little less than 5% down. And this is another level of demand here. Okay, so these are kind of three regions where if we get a pullback here, we might actually we do some further analysis, and we would decide, where we might be looking to catch a bounce if in fact we got a pullback. And then, like I said, in terms of the price above us, the next area that we really kind of would be enthusiastic trading would be this one. All right, so that's what we're looking at in terms of the SPY. Okay, we turn to the Qs. Just spread that out a little. So here's where we are again. There's current price again, and this was an area that had gotten created earlier, and you can see this everything has just been kind of trading kind of in this mess here for quite some time. And so, in a sense, I'm not interested necessarily in looking for any sort of trades out of here. Okay, so for us, really, this was an area that was a potential area before. It worked well the first time, but now that price has come back, it's already been sort of, in our estimation, chewed up. So I'm not really enthusiastic about trading this level here anymore. Okay, over here, this is another one, but because of all of this trading back here, this is, again, I'm not really enthusiastic about this. So on the Qs, unlike the SPY where there were some nearer term levels, the first really clean, nice level to trade, I think, is this one. This is kind of a fair ways down. That's about 8% down here. I might actually look, okay, what we could anticipate. Again, we're not predicting, but right here, if in fact we did get a rise out of this level right here, let me just spread this out just a little more here. If we got a pop out of here, this would actually become an area of interest, and we could actually look for this to be an area to go long out of. But right now, it doesn't really qualify for that. So what we would need to do is see a pop out of here, and then if we got a return here, I would kind of take a look at this. And this might actually represent another area of demand where we could buy here. But for it to become an area of demand, there first has to be a clear indication that price has fired out of here and that there's a clear exhaustion of sellers. We haven't seen that yet. But again, we can plan and anticipate. So at any rate, that's kind of what we're looking at here on the Qs. Lastly, to move on to some of, before we go on here, let's take a look at the various sectors. that went on this week. Okay, so here are the various sectors here. So you can see here for the last week, the communications were obviously the strong ones here, and the transports were the weakest, and then everything else was kind of clustered in the middle. And of course, you'd expect that since the whole market was trading in that narrow range, and you can see, you know, the SPY was only up about 0.9% or something like that for the week. And so as a result, you would expect that these would all kind of be clustered around here. And then, yeah, you might have one or two outliers on either side, but essentially, you know, you can almost think of this as, everything is just kind of clustered in the middle. So I refer to these as between sectors. So these are all the between sectors, which is basically everything. And then really the clear point of relative strength was communications, and the clear point of relative weakness for the transports. And if we look at the last, for the rolling month, we can see energy has certainly been the stronger one. Last week, for the recording that I did that ended on the 21st, we could see that price had dropped about 3% or so last week. This week, it kind of leveled off. And then similarly with the financials were pretty much level, actually maybe down just a couple of ticks, but really for the financials were, kind of the week, kind of flat. And then for the week, again, it was really in terms of relative strength, and we could see that by the upwards, by the movement between last week here, that band there, and here. We could see real estate, consumer staples, communications, and tech. Those are all kind of the ones that have the upward slope here. And those you can see were the strong ones this week. And again, that's all reflected, of course, here. Okay, we can all see it. If we actually look at the intra-week here, we can see that here's the tech kind of moved up from there. Where then we can also see communications and the consumer staples. Okay, so that's what we're looking at in terms of the sectors. So what we tend to want to do is look at using this as sort of a proxy for relative strength, and look for kind of strong stocks in the energy area in order to then identify pullbacks in there in order to more or less leg into the general bullish moves that we've been seeing in energy in order to get into long trades, or to get into, let's say, bullish trades based on that thesis. Okay. Similarly, for the weaker stocks, what we tend to do is look for those supply zones that I told you about, and look for corrective rallies into those supply zones in order to then create bearish trades. And again, the bearish trades, of course, can be expressed by either shorting the stock directly, buying a put, or in terms of the simpler option strategies, buying a bear call spread. A bear put debit spread, or a bear or selling premium for a bear call vertical credit spread. So those are various ways that one could express those trades for the stocks that are relatively weak. Okay. Lastly, I'll take a look at a couple of other symbols here. And if we go back to the live charts here, I'm going to take a look at Apple here. Okay, so here's that analysis that I was looking at before. Similar analysis that I was looking on for the various sectors. Excuse me, for the broad market, for the SPYs and the Qs, and now kind of doing this for Apple. So here again, here's Apple at current price. So below here, there is an area of demand here. However, I'm not enthusiastic about this area of demand here because of this prior area of trading. That this is more or less a reaction to this. And so this might not be an area of fresh demand. It's certainly an area of demand, but it might not be fresh demand based on the fact that there is this trading here, and price kind of popped from here. So again, this could very well work. It's just a little lower probability because of the presence of that trading. Okay, same exact comment here. Again, price came up. Again, this is an impressive move out of here. So I'm still going to very much look at this, but with the understanding that it's probably just a little lower probability because of this trading here. Okay, right here is really the first clean area of demand here. But then again, that's about 11% down. Okay, so you need obviously a major pullback in here in order to really find something. The other thing that I might though look at is, now that I'm looking at here, is actually that area right there. And I would probably break this down. I might even just drop it down into a 1 hour chart. And this could actually this might actually be a reasonable, there might be a reasonable setup in here. So I would actually kind of take a further look at that. All right. And then and then actually looking above here before I move on from here. So right here, that's the area that's sitting above current price. And so you can see price dropped. There's a basing area, and then that gap, and then that shot down there, that big gap, and then that bearish candle here. So this kind of represents, again, that exhaustion of buyers that I spoke about before. So this might be an area again where one could express a bearish trade in the ways that I was just talking about earlier. Okay, and so that is actually a short distance away. That's only a little above. It's only a couple of points above where we are now. So we'll be keeping a careful eye on that. So again, that would be the area that we could potentially short. And then, like I said, right here, there's that area of demand. But in fact, there might be actually something in here. At which point, though, if we end up shorting here, this would actually be a reasonable place to actually establish where the target might be on that. Okay, so that's what the chart of Apple looks like. And then the last thing I'll take a quick look at are a couple of other symbols here. Let's take a look at Google. Okay, so here's where we're looking at Google here. So here we are at current price. So again, we have an area of supply above. Let me just go back in time here. And so right here is that area, the price rallied up here, clear area of consolidation, that gap, and then again, that shot down. Okay, so that's an area of supply where we could express a bearish trade. And then if we look below current price, see, we have these two regions here. I consider these to be what I refer to as support zones. Lots of people look at support and resistance as kind of these single lines. I happen not to go for that. I kind of think of more of support and resistance zones. I don't think the market is that exact and it recognizes one particular price line down to the penny. But I really look at it more or less in a common sense perspective, that this is a region, a zone where clearly that was forming support here. We had multiple points of contact. Price came down, bounced out of it, came down, bounced out of it multiple times. Okay, so when price comes back here again, I don't necessarily expect each time it comes back. The way we look at from our perspective of looking at supply and demand, we tend to think that the more often you go to the well, the less likely this level is going to hold, because there's only going to be so much buying, so many willing buyers at this area. And so as a result, each time price comes back, buyers push the price up. There's only so many times that's going to happen. And so as a result, the more often that this comes back, price goes up and kind of repeats this cycle, the less likely it is to hold. So this has been back here multiple times here. So I'm not necessarily not in love with this to go long. Similarly, back here, we have, again, a smaller version of this behavior here. But again, you can see price kind of is bound, this area of support, and its price is bounced out of here multiple times. The one thing I will comment on for Google is if you look right here and you kind of just draw that line here and we look to the right there, you'll see that this level is sitting right pretty much at the round number of $100. Okay, so obviously one of the things that as retail traders will oftentimes take into account round numbers. So I will certainly be mindful of that. And so as a result, this level just kind of gets a little more leniency than this one, just because of the presence of the round number. I wouldn't put, no pun intended, I wouldn't put too much stock in that. But from a behavioral finance kind of perspective, there is psychology involved with trading. And so as a result, people do tend to, and market makers are also smart about it. They kind of will run stops based on round numbers. And so the fact that you have a major round number that coincides with this area of support, I would keep it, I'll keep an eye on that. And then right here, this is really the really nice trading area here. And again, that's kind of a ways down. And so as a result, so I'll be looking at kind of this level, looking at this level. And then similarly, as I talked to you, I think about the SPY chart before, while price has not rocketed out of here yet, if price does rocket out of here though, and we actually get a breakout to the upside, this actually becomes another area of demand, okay? But it hasn't demonstrated that yet. The last comment about this chart here is that because of the fact that we have all this trading, and I'm not in love with this in terms of a demand zone anymore or support, if you turn that on its head, obviously, if it turns out that this is a really weak area of it's not an area of demand, and if it's a really bad area of support, then it might actually become a candidate for a breakout trade to the downside. So we will certainly be looking at that. In other words, to actually maybe perhaps look for a breakdown trade after it clears this region. So we'll keep an eye on that. One caveat about that, of course, is that if you have this area of support right below, this is not going to necessarily have a great deal of distance to go before it's going to kind of hit the floor underneath it. So one has to weigh all of that stuff from the perspective of reward and risk. All right. But anyway, that's what I got today. So again, if you like what you saw here today and you're interested, first of all, again, we would be really grateful if you would kind of give us a like and subscribe to our channel. And again, more importantly, why don't you click on the schedule a call, and we would be delighted to talk to you. So again, thank you for the privilege of your time. And if you're trading, have a good trading week, and we will see you next time. Take care. Bye-bye.